Hi friends, it's little old Phil again, and I've been joined by Tom Atley from Trussle. Tom, good to see you again. Thanks for coming in. Are you okay?
I'm good, Phil. How are you?
Doing well. Enjoying the pod, and really pleased that you've been able to come in. I wanted to talk a little bit about age and how that can affect somebody's ability to get a mortgage. The Halifax, this is the reason for the topic today. Halifax, I saw released some numbers that the average age of a first-time buyer was 32 and 33 in London, and that is without question rising. I think a decade ago, it was well down into the 20s. So is that here to stay? Well, it looks like it probably is. Cost of living is rising. Levels of deposits are possibly rising, or certainly not decreasing. What concerns me is that as people get sort of to 40 and possibly even beyond 40, that may be the age that people it's taken them that long to save up for a deposit. Does that affect their ability to get a mortgage, given that the standard mortgage was 25 years?
Yeah, it doesn't affect their ability to get a mortgage. There is really no such thing as a standard term of 25 years anymore.
Okay.
A mortgage broker would recommend a mortgage term to suit your budget. So you would say, I'm comfortable paying £800 a month, and they would recommend a mortgage term that meets that budget. So whilst people that are into their 40s will need to look at, they couldn't take, for example, a 40-year mortgage term that a 25-year-old could, lenders are being more flexible. They're realising that people are taking longer to get onto the property ladder, and people are working longer as well. There isn't a set retirement age at 60, 65 anymore. Many people are going beyond that, particularly with self-employed people and the economy as it is at the minute. So lenders will lend without really questioning too much up to the age of 70. Someone that is in their 40s could get up to a 30-year mortgage. Some lenders will even go beyond that. It's about plausibility. If you're in a job that you could feasibly do up until the age of 75, if you sat behind a desk like I am, we could be going on forever. They're not going to lend to a fireman or a firefighter, or a landscape gardener, or someone that does a manual job up until that age. Plus, they're increasingly looking at pension contributions as well. So if you're paying into a pension, if you've got a pension projection that says that you comfortably afford this mortgage, then we can look at it. And as we've discussed before, there's a lot of parents that are helping their children out now, and that comes with difficulties with age as well. So potentially, if a parent wants to start their mortgage journey again, helping out a child, then they can do that.
Okay. I just wanted to take a moment in the middle of proceedings here to say a very big thank you to our friends at Trussle.com. They are the sponsors of the whole series. Trussle were the first online mortgage broker, and they've indeed since been voted the best mortgage broker. Not just online, but the best mortgage broker. They are a hassle-free, fee-free way of getting a mortgage, and indeed they are the only broker with a 5-day speed promise. Talk to me about lifetime mortgages. I've seen them, I've read about them, I don't know much more than that.
Yeah, lifetime mortgages are a really tricky concept, and you really need to be 100% sure of what you're doing. So you should seek independent legal advice. Speak to your family and loved ones, because what you're effectively doing is spending their inheritance now.
How do they work?
Well, Trussle don't actually offer lifetime mortgages, but what a lifetime mortgage would do is effectively say, right, I own this house outright. I'll give it to the bank. The bank will give me some money back that I can use to spend in my retirement. But they'll take my house when I die, and my children won't have anything to take, and the interest rolls up and snowballs and accumulates very quickly. So you're actually not going to be in a position to know how long you're going to live for, and therefore how much you're going to owe at the end of it. Okay. So it's a very tricky concept.
It sounds like it's one to steer away from unless you really need.
If you're really desperate and you've got a house and you're planning on giving all of your inheritance to a cat sanctuary or something, then it may be one to consider. But let your children know.
Okay. How can someone who's perhaps in the latter stages of life, shall we say, what can they do to help support, make sure they get a better mortgage? Are there kind of hacks?
There are hacks. So the things you can do are make sure that you're paying into a pension. That's the first thing a lender's going to look at. They're going to see your pay slips when you're making a mortgage application. If you're paying into a pension and you've got a pension projection to say that, you know, when you retire, we anticipate you'll be earning X amount a year, then a lender will be happy with that. If you're self-employed and you can conceivably continue to work, I would say that you're paying into a pension fund yourself. That's the main thing to do. But the hack is, and I'm going to repeat what myself and Laura have said, is speak to a mortgage broker. The mortgage broker will know which lender will happily lend up to your 80th birthday or beyond, and who to avoid. So
once again, and this has been a recurring theme throughout the pod, isn't it? It's knowing the lenders and what their criteria is.
Absolutely.
Just one more question, if I may. If you took in a lodger, does that help? I mean, it obviously helps with your kind of running costs of your life, but would it account towards your affordability of a mortgage?
There are a couple of lenders that will do it. It's not standard practice. It's not something that a lender will take on with open arms. You may be able to find someone that can help. Bear in mind that lodger income will need to be declared to the taxman. So again, speak to a tax advisor, because we'll need to see that affordability won't be taken from the money going into your bank account every month or the tenancy agreement. It will be taken from your tax return showing how much you're paying to the government.
Sorry, I just thought of something else. Later in life, if you're taking on a mortgage, any thoughts on whether interest only or repayment?
It depends on your circumstances, certainly. I would always suggest, if you have the means to do a repayment mortgage and pay that mortgage off every month so there's no nasty surprises at the end of the term, you can afford to do that, absolutely do that. There are options for interest only if you have a suitable repayment vehicle. So if you're thinking, well, actually, I will sell my big 4-bedroom family home and downsize to a retirement home, or I have a pension that I can draw a lump sum from to pay the mortgage off, or I've got a child that's about to earn a lot of money that can help mum and dad out, then interest only is an option. But just be aware of the risks on interest only.
So that's interesting. There are only a handful of occasions where you would advise a client interest only is the way to go. Basically.
Yeah, if you can afford to make the repayments every month, it's a much safer thing to do. It's a much less risky option. There are benefits of interest only. Interest only is an interesting one because it was available for anyone and everyone a number of years ago. It all stopped during the financial crisis because it was seen as too risky, and now more lenders are coming into that market and being flexible around people that earn annual bonuses or that have got say pensions, ISAs, and investments that can pay that off. But you need to, a lender will, that will be the first question they'll ask is, how are you going to repay this mortgage in 20 years? And you can't and ah about it. You need a definite proof of what you're going to do.
Playing the lottery or
exactly.
back in the 230 at Windsor or something
that
like that.
Would be nice,
not quite going to count. Tom, as ever, thank you for coming in and sorting out our difficulties. Thanks everybody for tuning in and listening. I hope you found that useful. If you do have further questions on the finance topic, be really happy to receive them. Please do so. Thank you for listening. All the best. Talk to you soon.
Thank you.
A few words of warning. Your home may be repossessed if you don't keep up repayments on your mortgage. You may have to pay an early repayment charge to your existing lender if you remortgage. Individual savings may vary, and terms and conditions can be found at Trussle.com.